Okay, we are moving on to number 7, an example of number 7. What we're doing here, I've written out the accounting equation again, but what we're doing here, I've just listed out your owner's equity. It consists additions by your investors, or investor I should say, your revenues, those are both additions, your drawings and expenses are subtractions. So we're going to keep that in mind as we're going along. The first thing we're going to do is we have to determine missing amounts. So for company A, the missing amount is total owner's equity. All we have to do is rearrange our equation. So we're going to take assets of $100,000, subtract our liabilities of $60,000. That'll give us our owner's equity of $40,000. Okay? Same thing to determine the missing amount for B company. It's like total liabilities, so we're going to take total assets, subtract total owner's equity, and that's going to give us our total liabilities amount. So the beginning part is fairly easy. It gets a little more complex as we move on. What we're missing, we're looking for the changes in owner's equity. We are missing the additional investment for company A. For company B, we're missing drawings, I believe. Let me check. Yes, we're missing drawings. So let's look at how we're going to determine this. First of all, we need to know what our change in owner's equity was. Well, to determine that, you take your end of year owner's equity for company A, that's $60,000. Subtract our beginning year owner's equity of $40,000. So that means for company A, we had a change of $20,000 in owner's equity. Now we want to see how did that occur. So again, remember, we're looking for the additional investment amount. So let's take those amounts we add and subtract. Let's just see what happens. Total revenues are an addition of $180,000. Expenses are a subtraction of $150,000. And our drawings are a subtraction of $20,000. So let's just look at how our owner's equity changed looking at revenues, expenses, and drawings. Would have changed by $10,000. $180,000 minus $150,000 minus $20,000 gives us $10,000. So we know the total change was $20,000. $10,000 of that change came from revenues, expenses, and drawings. So that means if we look at our change, I'm going to just erase, don't have enough room. If we look at our change of $20,000, subtract the $10,000 that we already determined for these 3 items, that means that other $10,000 change in owner's equity came from additional investments by owners. Okay, now let's look at B company. We're missing drawings. So first let's look at our change. Again, we take our end of year owner's equity amount, $120,000, and subtract our beginning owner's equity amount, which is $80,000, and that gives us a change of $40,000. Again, let's look at what we know. We know we had $30,000 investment from the owner. We know we had $150,000 in revenues, and we had $80,000 in expenses. So we add the investment by owner and the revenue, we subtract the expenses. Excuse me. So this is going to end up equaling $100,000. Okay, our change is $40,000. $100,000 of it came from revenues, owner's investments, and a deduction from a deduction for expenses. The change was 40. We had 100 coming from those 3 components. Let's subtract the 40,000 change. That'll tell us how much the owner's drawings were. Owner's drawings for Company B, $60,000. So you can follow the same example for number 7, and hopefully that'll become clearer. I know it gets a little confusing, and as I said, we did number 6. Make sure you have the study guide, and we're going to just kind of go through it a little bit, just because I know number 6 gets a little confusing.